right. Good morning. Thank you for the opportunity to be here. We are Team G. My name is Emma.
I'm Anthony.
I'm Paul.
I'm Heidi.
And I'm Will.
And we initiate coverage on the Coca-Cola Company, which is the largest non-alcoholic beverage company in the world. It manufactures and sells 4,300 products across 500 different brands. At the end of 2019, it closed at a trading price of $55.35. After careful consideration and valuation, we project a target price of $55.14, assuming a 12-month holding period. Because of this, we issue a hold recommendation. So to start out, we just want to give a brief overview of the industry that Coca-Cola operates in. So it is a large and established industry that has a market size of over $1 trillion. So as an established industry, there is a large market of players ranging from large conglomerates to small startups who all play in a very global market. So since the products that come out of this industry are actually considered consumer staples, these companies often result in steady cash flows that are reliable for these companies. On the other hand, as a result of being an established industry, it is also highly competitive. So shifting consumer preferences around taste, as well as increased regulation around health concerns, have resulted in these companies needing to be constantly innovating products. In addition, these companies have to be mindful of how they're actually reaching their target market through various creative marketing and promotional strategies. Finally, these companies are always being mindful of maintaining their margins or even expanding them, whether that's through streamlining manufacturing to reduce costs or gradually increasing prices to customers. So now I'm going to hand it off to my teammate Anthony to talk a little bit more about Coke's business model.
Thank you, Emma. So Coke has two main product channels. These are concentrates, which are things like syrups that they sell to bottlers or to businesses that take it the final step for the consumer, and finished products, which are ready for the consumer. From there, they have different product types such as juices, teas, soft drinks, waters. Coke runs its business through 7 segments. 4 of these are geographically based. We do want to touch on Global Ventures, which is their newest. Global Ventures is used to streamline acquisitions and partnerships through the entire company. We also want to highlight bottling investments. So bottling investments has recently undergone restructuring, which has shifted product channel focus from finished products to concentrates. Next, I would like to talk about portfolio reshuffling. So Coke is constantly reshuffling their portfolio due to consumer preferences and changes. Their current product portfolio, as Emma stated, has 4,300 plus products. They know not every product's going to work, so they're constantly killing all products, which they call killing zombies. And last year they killed over 600 plus. We really want to focus on this because we feel like this is something Coke has to stay ahead of to beat the competition. Lastly, I want to talk about corporate governance. I want to hit some highlights here. So Coke has 76% institutional ownership. They have 85% independent board of directors. We did want to harp a little bit on sustainability. So Coke by Forbes is 2019 world brand leader in waste, plastic waste. And this is something they really have to focus on. They have 4 sustainability goals to do this, which are water stewardship, sugar reduction, world without waste, and community. And now over to Heidi for competitive landscape.
Thanks, Anthony. Our analysis of the non-alcoholic beverage industry using Porter's 5 forces indicates moderate overall competitive pressures to Coca-Cola. Some of the particular threats that we just wanted to point out was the rivalry between existing firms and buying power. The number of competitors in the beverage industry is extremely high, and there's nearly no cost of switching products. In addition, there's also the looming threat that as consumers are going to move more towards those healthy alternatives, that the demand is going to shift away from these sugary beverages. However, Coca-Cola can play to their strengths such as price stability and brand loyalty, and they will be able to and stay at the forefront of their consumers. Last year, they spent $4 billion on marketing efforts, so you can tell that it's very evident that they are trying to stay in front of their competitors. Within current product lines, we have identified some key competitors in a global sense. Coca-Cola has some area of strength where they are the majority market leader. For example, carbonates, they are the dominating force. They are over double the global market share of their next top competitor, Pepsi. But there are also areas of opportunity. For example, in 2018, Coca-Cola rolled out over 400 new products that were all just bottled water, teas, and juices, and all three of those are booming in popularity with consumers right now. Lastly, I just wanted to touch on some key investment risks of Coca-Cola. The first being global economic performance, which they mitigate through hedging exchange rate risk and commodities contracts. A second key investment risk is constant changes in consumer preferences, which they mitigate through portfolio diversification and constant modification, such as through portfolio reshuffling. A third and final key investment risk today is the cost versus the benefits of acquisitions. And like Anthony touched on earlier, in October of 2019, they rolled out their Global Ventures Group, which is used to just really scale those large acquisitions and partnerships. And now on to Paul for historical financial analysis.
Thank you, Heidi. Recently, Coca-Cola has undergone a strong portfolio positioning to capture this change in customer preference, as well as the bottling refranchising that Anthony and Heidi have talked about as well. And that has resulted in declining revenue over the past few years. However, margins have expanded, as well as they've increased their revenue in 2019, an acceleration of 8.6%, as the company has reaped benefits from its new strategic plan. One important thing I want to note with historical financial analysis, in 2017, the tax number for 2017 was higher associated with the Job and Tax Cut Act of 2017, and that affected their whole 2017 fiscal year performance. Now going back to their operational performance with capital expenditures, the company's going to maintain their mergers and acquisitions activity to keep ahead of the changing customer preferences and the competitive landscape, and will result in the continuous capital expenditures over the coming years. And all these factors I've mentioned result in a free cash flow has increased over the last 3 years. And the company's maintained they'll use that free cash flow to try to attempt to de-lever their balance sheet. The company has stated that they will try to get a 2 to 2.5 times leverage mark. However, as you see here, they have not hit that mark yet, but they're still trying to maintain to get to that target. Now to look for the valuation of Coca-Cola.
So for valuation, there's a lot of things that go into how they market price as a company, right? So we use a weighted average approach to try to look at the holistic ways. So we put a 50% weight on the discounted cash flow model, and so how we built that out was a 5-year projection, and then we discounted that back to 2020 using a half-year convention. So for our discount rate, we use our own calculation of the WACC of 4.75%, as well as a long-term free cash flow growth rate of 1.5%. So the key drivers to that model were, as Paul mentioned, top-line growth as well as a strong margin. So now looking at dividend discount model, we put a 25% weight on that because we felt like that was really important to Coke, considering they've had a dividend since 1963, and they've continued to grow that every year for the past 58 years. So we assumed a long-term dividend growth rate of 1.5% after 2024. And so then lastly, we put a 25% weight on relative valuation as we looked at 3 main multiples, the EV, the EBITDA multiple, the mark-to-book equity multiple, and then the PE multiple. And so with that, we took the average of those 3 and then added a 15% premium because we felt like Coca-Cola has a market-leading portfolio compared to its peers. So now, the main pros to the investment we felt like were that Coca-Cola does have that market-leading product portfolio. Because of that, they've been able to expand out their operations and their infrastructure, and with that, they've had strong cash flows that have allowed them to grow their dividend historically. However, there are major cons to the investment in that they are an extremely competitive industry, and there's a lot of rivalry, and so they also have a global presence, which has then created a lot of foreign exchange risk. And then lastly, because of their market-leading product portfolio, they have a pricing premium to their stock price.
So after consideration of all of these factors, so touching on a bit qualitative, quantitative, we ultimately conclude for a hold recommendation due to our target price of $55.14, which would result in a negative 0.38% return from that fiscal year-end 2019 closing price of $55.35. Thank you so much for your time and attention, and we're happy to take any questions you may have.
Could you tell us how you got to the 4.7 weighted cost of capital?
Yeah, so we use, for cost of equity, we use CAPM. So we used the 10-year treasury rate as the risk-free rate as of January 1st, 2019. And then we used 5-year monthly regression, and then did the geo mean off that to find the average expected return on the market, and then also the beta. And then we used Bloomberg's pre-tax cost of debt, which was 1.81%. And then they've had a long-term effective tax rate of roughly 19.5%. So we assume that. and that gave us a WACC of 4.75%.
You indicated that one of the risks was the valuation premium. Can you give me a little bit more context to your conclusion as to why you think they're at a valuation premium versus peers or other companies?
Yeah, so Coca-Cola is definitely, it's established player. It's the world's largest, #1 within the non-alcoholic beverage industry. So we just wanted to be on the more conservative side, just because it's such a recognizable brand. It's established. It's got a lot of pros going for it. So we feel as though the market has built in that premium that may not always be at that same size that people are building it. It may not actually be at that level. So we wanted to caution maybe against that excitement around the company.
So if the price isn't going anywhere, why is it a hold? Why is your recommendation a hold?
So, correct. So just, we think that due to the company's, consistent level of acquisitions, they're going to keep that CapEx. We're really seeing a shift in the market. In the past, from the company's operating history has always been these carbonated, sugary beverages, but we're really starting to see that shift in consumer preference to healthier drinks. We're starting to realize that maybe these aren't the best things to put in our bodies. However, we think that Coca-Cola, with its established operating history, it's got the bottling and distribution networks, so it can distribute if it needs to shift from those sugary drinks to healthier things or water, to those different products. So we remain optimistic about that. So that's not something that we are fearful of. So we're just kind of at a crossroads. So
And you
just
collect a nice dividend in the meantime, right?
Exactly.
Okay, good. All right, just wanted to know.
Yeah.
Yes.
Thanks for the segue, Kurt, because so my question concerns market sentiment, and do you see Coca-Cola potentially being a beneficiary of what's going on in the market in terms of moving away from risk, looking at more conservative investments, more defensive sectors, and a 3+% dividend yield when the 10-year treasury is yielding, what, 1.15?
Yeah. I definitely think with Coca-Cola that you're going to see that shift towards that conservative, especially with the current market state of the coronavirus and impacting a lot of companies' revenue, especially that exposure in China. You're going to see that market sentiment be and boost up as well, just because they have that steady cash flow. And also what we mentioned in the presentation about the innovation, that there is not a huge risk, but it is evident about how the sugary drinks will decline, but because of their innovation, their M&A activity that we've seen over the past few years, especially with the Costa Coffee acquisition, along with Vitamin Water, all the other brands that they've added on, that they're going to continue their revenue growth, and their management has shown that they can do the job, and so many investors like that.
But still a hold.
Still a hold right now. There's a couple of things that, as Emma had pointed out, that are still in the air right now, but investors will continue to move towards that. Yes.
You mentioned revenue growth, and I think you spoke a bit about the DCF assumptions that you use. Just wondering if you would speak more to the revenue growth assumptions that you use for that, as well as cash flow growth assumptions.
So I can speak to geographical regions, since 4 of their segments are geographically based. That's what we use as like the base of our model. So we use the IMF predictions of GDP, and we average out all the regions, and so that's how we predicted those. And then Will can speak on the other segments.
So we actually have this in our appendix. Yeah, so as he said, because it's a consumer staple, we did geographic roughly to the GDP growth in a region. And then for the corporate and global ventures, those were a little bit tougher because obviously global ventures is acquisition based, right? So that's tough to model to really know. So what we really looked at was how do they organically grow? Because that's been the thing, is historically they have grown organically. It's just been divestitures that have been kind of sinking revenue. So what we really tried to look at is like how strong was and real was organic growth.
Where are those estimates coming from?
Based off of GDP. So GDP,
Your
IMF,
estimates.
GDP. Yeah, exactly. These are our estimates. Yeah.
Good, thanks.
Yeah. Sorry. And so for non-geographic, we really tried to look at how strong is is organic growth rate. We tried to match that historically. And then obviously they have, as we kind of talked about, they're going into coffee and they're going into the energy drinks, and those are two of the fastest growing industry or segments in the industry. So we tried to raise it a little bit, and then we also lastly looked at the entire market for non-alcoholic beverages is supposed to grow long term at like approximately 5%. So we kind of took a holistic approach on all this and tried to per segment break it down like that.
Does it make sense, does your team think it makes sense for the company to pay down debt when debt is so cheap at this point? Surely they can achieve a better return by continuing to invest in the business.
Absolutely. So I think it's not as much paying down debt. I think they're trying to emphasize operational cash flow. And so I think they're trying to just get away from that because since James Quincy, their new CEO, he came in in 2017, it's been a little bit of a different policy and the shift of how they do things, right? So I think it's less about debt and more kind of how can we just de-lever, be safer, and then just concentrate more on let's do internal growth through our cash flow.
ESG is a big thing now. How does Coke fit in that space?
Sorry, ESG as in like corporate governance?
Environmental,
Okay.
sustainability,
Sorry.
social.
So definitely, as my one slide, I said that they were voted last year world leader in plastic waste. So I think definitely the sentiment out in the world is everyone's like, there's been a lot of focus on that. So I think it's definitely something that they have to be on top of at all times. The industry's kind of moving that way, and they have sustainability goals in place with goals, and that's in the appendix. We're gonna go to that. Yeah, so these are different things they want to focus on, their strategies and goals. And so, I mean, they have these plans in place, so I think reasonably they should hit most of them. So,
Yes.
So, getting back to kind of their mix and they've still got a pretty large emphasis on carbonated drinks. But I'll say that they've made a lot of progress because back when I covered Coca-Cola, I think they were around 80% carbonated drinks. So they made a lot of progress. What are the areas that you would anticipate Coca-Cola, the faster growing areas that they haven't necessarily gotten into very much? Where do you see them going? I mean, will Coca-Cola ever acquire a food company? I mean,
I think.
Yeah, so I can speak on that a little bit. So food, I've seen Coke try to stay away from it compared to like a Pepsi who
Right.
really tries to diversify in
Right.
that. But I think that Coke is like recently been trying to really diversify their portfolio as far as, especially with coffees and I think bottled water, people are way more aware of water quality like worldwide, especially in like the West Pacific. And so I think that I see them going more towards non-alcoholic, like sparkling waters, bottled waters. They're also, the ready-to-drink coffee segment is also big, and so is tea, which tea, Suntory, is one of their biggest competitors in Asia. It's not as big in America, but I think that they're really working to develop that sense as well.
Yeah. And another thing on that too is, you worry about the potential erosion of your existing carbonated beverage. However, we see more going off of those water, that coffee. So now you're still targeting the same consumer, but instead of that consumer just picking up their soda with lunch that day, maybe they start out with an iced coffee and then they have a water midday and then they drink that carbonated drink and then maybe hit their afternoon slump and need their energy drink.
One last thing I would like to say about that actually is something that's good, maybe good for Coca-Cola, is that alcohol sales for the first time almost ever are on the decline, and I think that could be a good thing for Coca-Cola because people are moving more towards non-alcoholic beverages to drink on their day-to-day basis, and so I think that's a good thing for Coca-Cola in their portfolio.
Yes.
last question, please.
Okay, last question. In terms of consumers, international versus domestic, where is the bigger growth happening?
The bigger growth. So there's 3 underdeveloped markets that they're aiming to go into. For the first is Latin America, the second is Africa, and the third is Asia Pacific. So they're targeting those areas of growth. But they still have that key area in North America, Europe, and they're trying to increase the mix of products in Europe. But those growth areas that you're talking about are Latin America, Africa, and Asia Pacific.
And to go off that, they have this new energy drink, and that's been really successful in Europe. And the coffee's been really successful in other areas too. So it's like all these different new products now can go to a different customer, as kind of Emma said, and so it's been